Alrighty, what is going on, everybody? Today I'm here back with another video for y'all. Today's topic will be risk management and how to properly use it in a play. So without further ado, let's get right into it. Now, my risk management rules. I have three main rules that I always teach everyone in my Discord and everyone that I talk to. One, no emotions. Whenever it comes to the stock market, the worst thing that you could do is be emotional. It's always you versus you, and whenever you're emotional and you're not cool, calm, collective in your trades, it always goes against you. From my personal experience, I've been on both sides of the scale, and personally, I've seen me succeed a lot more when I'm a lot less emotional in comparison to when I am. So it is always key to enter a trade knowing that you won't be emotional. Now, how do you do that? Well, you could always be sizing down, taking trades with farther expos than normal, or just even paper trading. People get the idea that you could just completely trade whatever you want in the stock market, but it's not like that at all. You have to be very selective and very smart with your trades. And in order to perform at a high standard, you have to not be emotional. Number two, always trust levels over percentages. Now, when you first come into the stock market, a lot of times, a lot of newer traders preach percentages. I completely disagree with this because whenever you use percentages over levels, you could completely get stopped out at a random time. But with levels, you don't get stopped out randomly. You get stopped out on your chart. Green is green. So many times I see traders take trades and not scale or take profits when they see green. I see traders on Finto, I see traders on Discord, I see traders everywhere saying that 20% is a casual gain. Now, if you were down 20% on a trade, you would be thinking the complete opposite. Scale, take profits, and go from there. The market is not your friend. Scaling allows you to not only take green on a base position, but allow your runners to run without you being emotional. All these three rules tie together, and I'll show you guys exactly why. Now for this week's example, I'm going to be using an alert that we gave out literally just yesterday. Now if you guys don't know, I do commentary every single day live on chat and on voice chat. I share my charts, my ideas, and thoughts behind the whole entire market, and I typically like to alert 1 to 2 A+ setups a day. With this example right here, this is a perfect example of how to utilize risk management. Now this trade was taken a little after open, specifically an hour and 33 minutes after. Coming into the day, I had a bull bias only because we had gapped up $20 to $25 the day before with CPI. And on top of that, we had gapped up a little bit overnight. So I went ahead and alerted my first play, and we entered with starters. Now, if you look at the alert, my stop loss on the play was the 9 EMA and the 5 minute. This is why. If you look at the orange and purple line on your screen, you can see that we've been riding the EMAs the whole entire day. And my anticipation was if we broke the 9 EMA and the 5 minute, we would get stopped out of our 0 DTEs. The most important thing I wanted to see was a flush candle close under the 9 EMA and the 5 minute. We never got that. Instead, we pulled back, came down here, saw a bullwick off this candle right here, which completely bounced us. It looks simple here, 2-bar rejection that just completely came down here, and we ultimately bullwicked off the 9 EMA. Now we bounced here, came up, and saw our contract spike up. Now, rule number one. Emotion. I never once got emotional in this play. One being, I was in with starters, so I was a lot less sized out than normally. Two being, I came into a trade with a plan. A lot of times I see traders all over the place who don't have an exact plan whenever they take a trade. They simply just get in just to get in. I got in this trade with the stop loss set in place and a profit target set in place. Now that's the key to risk management. You can see we took our entry here with starters, came down here, saw an aggressive candle to the downside, where we ultimately ended up bouncing off my levels. Which brings me to number two, levels over percentages. Now instead of using your levels and EMAs as your stop loss, imagine using a percent stop loss. Say you have a stop loss set at 10 to 15%, you would have immediately got wicked out this play right here and completely lost without a potential comeback. But with us, we're able to read charts, and we were able to see that we got a bounce off 396 and the 9 EMA and the 5 minute. Those are two levels of bullish confluence right there that just completely bounced us off our levels. Now, me personally in this situation, what I thought was I could take a potential average. Reason being, I really liked how we were bouncing off our levels of support. And that's exactly what we did. At 1042, we took our average. And on this candle right here, we turned this play from a starter play to a full complete play. Our average took us from 127, which is our initial fill, to 115. And you can see on the 1 minute, we almost immediately double bottomed and saw upside, where I ultimately ended up scaling my base here. Now, the good thing about this is I locked half in my position, where I'm able to profit and now allow my runners to run a lot less emotional. Psychologically, you could be the most experienced trader ever, but everyone's human. They will get emotional. And with scaling, what it allows you to do is prevent those emotions. On the next candle, we saw a bullwick off the 9 to 21 EMA as it retested again and saw a mass upside move. Our cons were about up 20 to 25% here, knowing that we could potentially see even more. We were met again with another green candle, which ultimately allowed us to scale out position. We scaled out here, reason being, you always want to scale into strength, which is another thing I always preach. Scale into strength. That's what we did here. Your IV and premium on the contracts will be juiced up the most, so why not just take profits? That's what we did there, locked in more, and now we were in very light runners for the rest of the play. We set our trailing stop to the 90 EMA just so we could have a nice tight stop. Got stopped out here. Rest of runners still went green, but ultimately the trade went very, very green. Right, we scaled out base at 15%, scaled more at 37%, and the rest of our contracts got stopped out for about 15% as well. Overall, a very successful trade where we used averaging and conviction and levels and no emotions. We also took green when we saw it. Whenever we saw that 15% move, immediately took. Taking green will only ever do you good. That is the best problem a trader could have. Fuck everything else, do that, and you will succeed.